Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, key milestones. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. I really do appreciate everyone subscribing. The channel has been growing relatively quickly recently, so thank you for subscribing. Again, we do not run any ads here, no paid promotions, no affiliate links either. So I do appreciate you guys subscribing to watch me talk about crypto. So every now and then I like to put out a video where we just look at key milestones for Bitcoin, both in the short term and the long term. And a lot of times we'll start on the daily time frame, right? We start on the daily time frame. And the 200-day, as we know, is a fairly important moving average. I do know, I don't personally use the 200-day to identify, between say bullish times or bearish times. I think that even below the 200-day, you could still be somewhat bullish. But I do know that there are some people that use the 200-day moving average as sort of their goalpost for being bullish or bearish. For instance, in 2013, we more or less held the 200-day moving average as support and continued on higher. And then when we got rejected by it, it was the signal of a bear market. Okay, but there are other times as well. Here's a good example where we more or less found support on it. We had a wick down below, back up, and then we got rejected by it. So getting rejected by the 200-day moving average over and over again is usually not a good sign, right? It's usually not a good sign. If we go back even further, you can see back in the first cycle, the 200-day moving average, we first found support on it, but then ultimately we got rejected back down. We came all the way down to these levels. We had one more wick back up right at the 200-day and then back down, rejected again, and then we broke through and we were off to the races again. So a lot of times the 200-day moving average by some people is considered a pretty important milestone. And for me, right now, we could also look at it at the current time. We are in fact above it. So note that we came down below it, we got rejected, right? We got rejected. We came back down again, we came back up, we got rejected. Now we are at least trying to hold it as support, okay? So this to me is a clear indication that even if we get rejected a couple times, we still have managed to get back above it. Ergo, even if we were to drop below it again, I don't necessarily think it's the end of the world. It could just mean that we need more time playing in the sandbox. Okay, but I would say, regardless of what your opinion on it is somewhat important just because of how other market participants might view Bitcoin either being above the 200-day or below the 200-day. If this ends up being, say, like a long reaccumulation phase rather than a quick move to the upside or back to the downside, we could just be in this range for a while, and it could entail going above and below the 200-day moving average very frequently, just like we did back in say 2019 and 2020. You can see that we moved above it, and then we came back down below it, and then back above it, and then back below it, and then back above it again. And this was just more or less a long reaccumulation phase. Now, I would argue that this accumulation phase over here was less risky than it is today, okay? And a lot of people don't like it when I say that, but this was in the regression band. Okay, this one's not. This one's in sort of no man's land. We don't really know, we can't really say for certain, should the prices trend higher in the short term or should they not? When you're in the regression band, you're more or less, the way I look at it is just blind DCAing into the market, more or less, and then just waiting, right? Waiting for us to actually make a run to higher price levels. When you're sort of in the middle, you don't really know. It's like 2013, we came up and then we came back down, but then we didn't go all the way back down. We ended up going back up to the top. And this one went to the top and then back down. This time we sort of just barely touched the bottom of the logarithmic regression band. We're back down. We did not go all the way back down to the regression band though. So we're sort of continuing to be in no man's land. So being above the 200-day moving average is certainly bullish in the sense that it will probably allow for altcoins to continue to rally, also being above the 20-week moving average. So there is a 200-day moving average. Now, let's also look at some shorter-term moving averages as well. So we also have the 100-day, which, as far as I can tell, recently has not been that relevant. We did have a bounce off of it here, and the last time we had visited it was back in September and October. It has not been super consequential recently. In the event that we do kind of drop back down below the 200-day, maybe the 100-day moving average is an area to look out for, and it is currently approaching a very modest $40,000. Beyond that, we have the 50-day, which we did come to just the other day. We had a wick down to it right here. The 50-day right now is at 44,710. Okay, and then finally the 20-day, which we're currently below, is at 48,746. So the 20-day moving average is one of those things that when you do get bounces, it can provide some level of resistance. Okay, we've seen that happen many times before. We saw it happen here. We got rejected by the 20-day over there. And if we go back, we can find plenty of times in the past when the 20-day has acted as some type of resistance on a bounce after a brief sell-off. Okay, so I would say keep the 20-day in mind as well. We do know that it has historically provided some level of resistance, so that might be an interesting area to look out for in the event that we continue moving higher. Currently, we're at $48,746. Now, these moving averages, again, are on the daily time frame. We also like to look at the weekly time frame because they also tell a different picture. Namely, the most important one is the bull market support band for me, which again is a combination of the 20-week SMA and the 21-week EMA. It is normally the defining line in the sand that tells us whether Bitcoin or the entire asset class as a whole is bullish or bearish. When Bitcoin is above the bull market support band, altcoins tend to do quite well. When it's below the bull market support band, the altcoin Bitcoin valuations tend to bleed, meaning the altcoin valuations against Bitcoin tends to bleed. We can also look at, say, like the 50-week, which is where we got a bounce. Okay, we got a bounce off the 50-week moving average. And we said this is a key bounce. We've seen this bounce before, okay? Bitcoin still has the work to do to prove that it can hold the 20-week as support. We've seen bounces before. This bounce off the 50-week got rejected by the 20-week SMA. So we are at least outperforming that, okay? We are at least outperforming that. If you go back even further, this cycle, or 2 cycles ago, we did get above it on this bounce, but ultimately we failed to hold it as support. So my argument remains the same. Bitcoin still needs to prove to everyone that it will hold the bull market support band as support. And my thinking, as I've said before, is we either hold it this time or we kick the can down the road 3 more months whenever we fall below it, and then I would imagine we get back above it, and then we can hold it as support then. But right now, we still want to prove that Bitcoin can hold it as support, and to show that, hey, this is not the market cycle top. We are going to hopefully hold it as support and then continue on later. And it is possible that the wick is all we get. I mean, I would like to see a more sustained test than just a wick, but we do know that in prior cycles, sometimes all we got was a wick. Okay, here is a wick, here is a wick. Nothing more at the time. So the 100-week moving average is a ways off at $23,000. And that hasn't been a consequential moving average for us in quite a long period of time. The 200-week is more or less worst case scenario, right? You know, if you're asking people what's the worst case scenario for Bitcoin, historically it's the 200-week moving average. Again, I know people don't like to hear that, but that is normally the worst case for Bitcoin. Okay, that's where it finds support in the event of catastrophic drops. There was one time here where we actually had a wick down to the 300-week moving average. You should note that the 200-week moving average is over $15,000, and it is continuing to move up. Earlier this year, let's say in January, the 200-week moving average was at, say, $7,000 or $8,000. So it's doubled over the last 8 or 9 months or so. So by the end of the year, the 200-week moving average could be closer to, say, 20K, all right? So it could be closer to 20K by the end of the year. That would be sort of worst case scenario for Bitcoin. So those are the key moving averages. Those are the key milestones that I think we need to keep an eye out for. If you guys like the content, make sure you subscribe to the channel. Let's go for 550,000 subscribers. Remember, we do not have any ads here, no AdSense. You should not have to watch ads before the videos. So please support the channel by subscribing. Thank you guys for tuning in. Click the bell icon to turn on your notifications, and I will see you next time. Bye.